XAUUSD, popularly known as the gold spot. And of course, I'm beginning to see quite an interesting situation going on in this market as the US dollar appears to be gathering some significant momentum as the new week has started, breaking down some of our key levels here to guide our decisions. So I want us to listen attentively to this and stay tuned in. Based on what I saw this morning, I saw price action breach both very important key levels, which I will be sharing today. And of course, I am of the opinion that this bearish momentum that started this week is as a result of market participants dialing down their expectations for a more aggressive Federal Reserve policy easing in the light of a stronger than expected NFP data that came in on Friday. Now, this adjustment has bolstered the US Treasury bond yield, emerging as a significant factor that may undermine the appeal of safe haven assets such as gold. Furthermore, I don't want us to get carried away with the idea that the dollar is going to rise significantly, hereby undermining the appeal for gold. The persistent risk of heightened geopolitical tensions in the Middle East, coupled with ongoing concerns about sluggish economic growth in China, may also temper the recent optimism seen in the equity market. This cautious backdrop may serve to mitigate the downward pressure on gold prices. So what this simply means is that any trading opportunity we are going to be taking on gold today or this week is likely going to be a short-term opportunity. Now, as market participants eagerly await the release of the US ISM Services PMI, it is understandable that we may see some choppy situations ahead of this event. So we are going to be having a structure here today, which will serve as a framework that will be a beacon for today's trading activity. Now, before I share with you my structure that will guide today's trading activity, let's quickly run through the daily time frame so we can have an holistic perspective into what is going on in this market. Now, on the daily time frame, we have a structure here, a very simple structure which we have been using in the last couple of weeks, only that I had to change the key level to suit the current dynamics in this market. Now, the first thing we observed here in the last 4 to 5 months is the fact that price action has been bullish. And to emphasize this bullish momentum, we connected a series of high and lows here, giving us an ascending trend line to work with. Now, besides the ascending trend line here is our key level, which definitely will be guiding our trading decision for this week, and it is situated at the $2,035 area. Now, you know how we use our key levels in this community. As long as price action remains below the key level, we want to be looking now for patterns and structures that support the idea of selling and not consider buying unless price action climbs back above our key level. Now, with the way things are going right now, price is currently oscillating around both the key level and the ascending trend line here, where depending on how market participant reacts to the structure will determine if we are going to be buying or selling. Now, the question going into the new week is, will buy pressure persist above the both structure to incite an uptrend scenario, or will price action break down both the ascending trend line and the key level to incite a sell-off? Now, to guide our decision for this week, I have a setup on the 4 hours time frame, which we want to be using to guide our decisions. And one of the things I noticed on the 4 hours time frame, after taking into consideration the nature of price action in the last couple of weeks, it is clear that price action has been bullish. And with this bullish idea in mind, had connected a series of higher lows to give us a couple of ascending trend lines here. But this trend line here is the one we will be using for this week. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying that asset. And we're not selling unless the ascending trend line is broken. Now, one interesting thing about the ascending trend line is how it interestingly shares a confluence with our key level here. And as you will see, the week has begun on a strong bearish momentum, which I did mention earlier is as a result of market participants dialing down on the expectations of a more aggressive Federal Reserve policy easing in the light of a stronger NFP data from the United States. So for this week, scaling down into the 1 hour time frame and trying to decipher how market participants have been reacting to that key level since the new week began, I was able to come up with this simple structure here on the 1 hour time frame. Now, first of all, let's acknowledge the fact that the ascending trend line we spotted on the 4 hours time frame has been broken to the downside to welcome the idea of selling this asset for this week. Now, besides this is the fact that price was initially ranging between the 2042 and the key level at the $2,035 area before it was broken to the downside. And if you are taking advantage of the breakdown of both the ascending trend line and the key level, well done to you for capitalizing on this opportunity. For me, I actually missed out on this opportunity as the time this transaction took place, it was midnight here, so I was definitely fast asleep. But of course, for those of us like me who missed out on that one, I capitalized on the breakdown of the support line here at the $2,027 area with the hopes that price action will continue to find lower lows and lower highs in this market. So as it is right now, it is looking very bearish in this particular market due to two factors. The first one, price is trading below the ascending trend line, which we talked about earlier. And secondly, price action is trading below our key level at the $2,035 area. Now, with this idea in mind, we should not ignore the potential that price could come back and retest the structures. Now, for those who had missed out on the opportunity of this breakdown of structure, let's wait and see if price will come back and retest the structure to incite a downtrend continuation. Now, with the way things are going right now on the XAUUSD, it makes quite a lot of sense looking out for selling opportunities. So as it is right now, let's see if the market will come back and retest the structure. If it does, if price comes back into the structure, the emergence of selling pressure below that area, which of course will let us know that buyers are finding it difficult to climb above the key level, will be a good sign for us to sell. Now, what are the patterns we want to look out for? Well, a reversal pattern would do, like a double top structure, head and shoulder pattern, or a rising wedge, whichever case it may be. Then look out for the breakdown of the rest of the neckline to incite the idea of selling. Now, it's not all the time that price may come back to retest the structure. Technically, it's not all the time it does this, but this is a theoretical expectations, of course. But in real time, we could see price not go that far before it continues the downtrend scenario. So price may come back into the 2027 before inciting the downtrend move. So we shall monitor how price reacts to the 2027 also. Now, if price comes back into the structure and we continue to see selling pressure here, good sign for us to join. But if price breaks out of the 2027, Then price coming back into the structure, we shall look out for reversal patterns to join the decline. So in summary, this whole structure supports selling ideas. Now, in as much as we're looking out for selling opportunities, I know there are buyers of the gold in the community who are looking out for setups to buy the XAUUSD. Now, if we are going to be buying the XAUUSD, the only condition that will make us want to be buying the XAUUSD is for price to climb back above the ascending trend line, then lead to the breakout of the resistance line at the $2,042 area before we can consider buying this asset. But as it is right now, everything is screaming bearish. So we shall exercise patience and continue to look out for selling opportunities as long as price action remains below this structure. So this is my simple view on the XAUUSD at the moment. If you have any questions whatsoever, feel free to let me know in the comment section.